If you have a side business, you must submit tax returns. If you are normally employed, meaning you are only employed, then you generally do not have to submit tax returns. It is often advisable and financially quite rewarding to submit a tax return. However, there is no legal obligation. However, if you become self-employed now, in addition to your employment, then you are officially self-employed. For the tax office, it is irrelevant if you operate your self-employment as a main source of income or as a side business. You are required to submit tax returns. In the eyes of the tax office, you are considered a fully fledged self-employed individual and therefore have all the obligations that self-employed individuals have. This also includes, among other things, submitting tax returns. Unfortunately, the whole topic of taxes does not get any easier when you are self-employed. Because we do not have just one type of tax that we all pay, the income tax, but for you, the sales tax may also be relevant and possibly the trade tax as well. We will answer the question of which tax return you need to submit with a side business, and we start with the income tax. The income tax is, one could almost say, the main tax, because we all pay the income tax. The wage tax deductions you have in your main job are advance payments on your income tax. Even though it is called wage tax, it is essentially just a form of collection. And even if you receive interest or dividends, the bank usually withholds capital gains tax. This capital gains tax is actually already a prepayment on the income tax. The point about wage tax and capital gains tax is that they have a final withholding character. The term final character means that you do not have to create an income tax return afterwards if you only have such income. This changes with self-employment. That means if you become self-employed in a side business, you must submit an income tax return at least once a year. It doesn't matter at all whether you make sales, have expenses, incur losses, or make profits. It is completely irrelevant. The mere fact that you have registered a self-employment obligates you to prepare an income tax return once a year. In this income tax return, you calculate all your types of income together. This includes your main job, which refers to your income from non-self-employed work, as it is nicely termed in income tax law, and your income from self-employment or commercial activities. And for that, you make an income tax return. I hear this question relatively often. Do I now have to submit a second income tax return for my self-employment as well? No, the only thing you need to submit additionally are extra attachments. This means you create an income tax return with at least one attachment N for your main job, which is non-self-employed work, and then you submit 2 additional attachments for your self-employment. Specifically, you need to submit the EUR form and the S form if you are engaged in freelance work, or the G form if you are engaged in commercial activities. And then you basically have an income tax return for essentially all your income. This brings us to the next type of tax, specifically the second type, which is the value-added tax. Value-added tax is commonly known as sales tax. Essentially, when you provide a service, for example, if you provide a service or sell a product, then your product or service has a price. However, you also add sales tax or value-added tax on top. This is usually 19%. In some cases, there are also reduced tax rates of 7% or 0%. And then you receive from your customers the net amount plus the sales tax, in total, ultimately, and the value-added tax, you must pay it to the tax office, and you do this as part of the VAT return. This means that if you are self-employed, you must also submit a VAT return. And if you pay more than a certain amount of VAT per year, you actually have to make a quarterly advance notification. This means you need to sit down once a quarter to handle your bookkeeping and calculate how much sales tax you have received from your customers in that respective quarter. On the other hand, you can offset the value-added tax you have paid to your service providers and suppliers, and then you make a quarterly advance notification. However, you only need to do this if you paid value-added tax on your total revenue for the entire previous year, or for founders. So founders must initially submit quarterly VAT advance returns and once a year a VAT return. You can be exempted from this entire obligation, meaning the obligation to report value-added tax, to make any calculations, to submit advance VAT returns, and also to actually file a VAT return. This exemption is called the Small Business Regulation. This term is very often confused and mixed up. The Small Business Regulation only refers to value-added tax, not to income tax and not to trade tax. The Small Business Regulation is basically a way to forego all the sales tax nonsense. That means you aren't involved in value-added tax, with one exception that you should be aware of, as many small business owners are not aware of it. I have already recorded a video on this exception. It's too much to cover, so I'll link it. In 2021, as a small entrepreneur, you have nothing to do with value-added tax. You can always take advantage of this regulation if your revenue in the previous year was below a certain threshold. These will be raised starting from January 1st, 2025, and then the limit applies. This means that if you were below these sales thresholds in the previous year, you can take advantage of the Small Business Regulation. I have also addressed the Small Business Regulation separately in another video. I will link that video for you here in the top right. And because I can already see the comment, there used to be an obligation for small businesses to submit a value-added tax return. This obligation was abolished in the Growth Opportunities Act, Spring 2024. This means that small business owners no longer have to submit a sales tax return. If you have not taken advantage of this regulation, you must also submit a sales tax return for your side business. And that brings us to the third type of tax, which is the trade tax. The trade tax is relevant for you if you are operating a business. This means that if you are self-employed, you do not have to deal with trade tax. You do not have to file a trade tax return, and you do not have to do anything related to trade tax. But as the name suggests, if you have a side business, then the trade tax is also relevant for you. But a very important note on this. The trade tax has an exemption amount based on a profit in Frankfurt for the year. This means you only pay trade tax when you make a profit each calendar year. If you fall below that threshold, then you do not have to pay trade tax, but you may still actually need to submit a trade tax return. Indeed, the Trade Tax Implementation Regulation states, more specifically in Section 25, that a trade tax return must be submitted for all businesses subject to trade tax whose trade income has exceeded a certain amount during the assessment period. Or in German, if your profit was below a certain threshold, you do not have to submit a trade tax return. My personal practical experience, however, is that tax offices and municipalities relatively often demand this anyway, and they are allowed to do so. Tax offices may generally always typically require you to submit tax returns. That means I would not submit a trade tax return in advance if you are below these profit thresholds. However, if the tax office or your municipality should inquire, then you must submit them. If you should have incurred a loss in a year, you should submit it out of self-interest because in fact, in the case of a loss, you can accumulate these losses. This is called loss carry forward, and then you can offset the accumulated losses against profits in later years. This means that if you incur losses, it should be in your own interest to submit a trade tax return. If you made between 0 and a profit, then you actually don't need to, unless the tax office or the municipality requires it from you. And if you make a profit, you must also submit a trade tax return and pay trade tax. A small note here, because I often hear the outrage that business owners pay much more in taxes than freelancers who have nothing to do with the whole issue of trade tax. That's not entirely correct, because the trade tax can be credited by business owners in their income tax return. This means that, in most cases, the tax burden for business owners is not higher at all. And these are the types of taxes that you should be concerned with as a side business owner: income tax, value-added tax, and trade tax. Depending on your profit and revenue levels, you will need to submit 1, 2, or 3 tax returns. It may be the case that you are active in certain industries, sell specific services or products, or have particular circumstances in your self-employment that lead to you paying additional taxes. Your company car, for example, if you should have one, is subject to vehicle tax that you must pay. I do not want to go into all these individual taxes here. The most important types of taxes that you should definitely keep in mind are the 3 mentioned. If you have any questions about this, feel free to leave a comment under this video and also check the video description below. I have linked you a series of videos that cover the entire topic of value-added tax, trade tax, income tax. Deepen that, and then you can continue directly. And if you are self-employed, which you obviously are since there is no reason for you to watch this video otherwise, then you probably need some kind of support as well. Either a bank account or an invoicing program, accounting software, a tax advisor, whatever. You can find all my recommendations for this below in the video description, or I will link them directly here. And now you could maybe watch a video about accounting or about taxes or about finances for a change, for example, this or that.